Hello and welcome back to the channel. In this one we're talking about swing trading and how the kind of differences are with day trading and kind of what to look out for when you are swing trading. So let's jump into the video. So before we kind of jump into the charts and that kind of thing, swing trading is a bit more of a long-term approach. It's kind of in between long-term investing and day trading. So day trading, you might get a 1 minute chart, a 5 minute chart, 15-minute chart, even an hourly chart could be known as day trading. But generally with swing trading, it could be a day to a few months. Maximum I would say is 6 months, and then after that it's probably long-term investing. But generally the swing trading is about 1 day to 6 months. What we're really kind of identifying is kind of short to long-term trends, and we'll have a look at that in the chart and kind of what I look out for generally within the swing trade. And we'll kind of do a little bit of technical analysis throughout this video for what I look for when it comes to swing trading. So yeah, before we get straight into it, obviously make sure you hit subscribe and like the video. I really do appreciate that for all kind of swing trading, day trading content, that kind of thing. And I do also go live with two of my friends, Nate and Kay, on the Trading Triangle channel, and I'll put that in the description down below. Every Sunday we go live, we talk about chart analysis, stock market news, earnings reports, that kind of thing. So if you're interested in that kind of thing, we go live every Sunday on that link down below. So let's jump into the Tesla chart. Obviously everyone, if you're into the stock market, you probably know what Tesla is. And let me just adjust my microphone. There we go. And here we have the Tesla chart. Now what I've done actually is what I normally do is have the 20, the 50 and the 200 moving average, which are these little wavy lines here. So the 20 moving average is the yellow line and the 50 moving average is the blue line here, as you can see. Normally I would have the 200, which would be the red line, but because I don't pay for TradingView, I have to have 3 indicators. And I wanted to use the RSI, which is this box down here, for the third indicator. So that's why you don't see the red line. So what are we actually looking for with a swing trade? We're looking to make money. We're looking to make profits on a semi to long term basis. Now generally with day trading, obviously it is a lot more highly leveraged as well. For me it's 5 to 1 for stocks and 20 to 1 for indices, that kind of thing. But with swing trading I generally keep the leverage to 0 basically. So I just trade it on my normal kind of brokerage account. Number 1-to-1 ratio. So if Tesla goes up 10% here, it will go up 10% in my position. So let's have a little look at this chart and see if we can see any potential moves coming up. Now already we can see that the RSI which is a momentum indicator for me personally, but on a longer term basis it can indicate where to buy and where to sell. Now if it is above this kind of 70 mark or 75 sometimes people use, that is an indication that it has been overbought. So obviously we had a big run up since really for the last couple of months really. And you can see that reflected in the stock price going up, and you can see that reflected also in the RSI. So this might be a point where you might be looking to kind of sell, take some off the position, but generally I find that quite tricky because obviously it can stay above that mark for quite some time. You can see it if we zoom out, we can see it has stayed above that. This particular stock anyway has stayed above that kind of area for quite some time before. So you could actually put that into your notes. So it stayed here for 15th of October so basically a month. This is also just under a month, so it could actually stay here for another month. So where are we now? This is what, a week, so you could actually have another 2 or 3 weeks kind of in this overbought section. So again, that's not everything, it's just an indicator that you kind of should be looking at if you are swing trading, but I wouldn't necessarily place a trade based on that. Now the reason I actually put the RSI in is because you can combine it with resistance and support. So let's go ahead and have a look at some resistance. If we zoom out a little bit, get a little bit of a clearer view of this chart, we can see that there might be a resistance point just here. Pop that in, and you can see a point of contact at just this area, many points of contact here, one big kind of support contact here, and obviously some more contact around the back kind of areas here. So if we go ahead and zoom back in, we can see that the stock is actually approaching that level now, and that could be why we saw a bit of a rejection yesterday. Now obviously these levels aren't certain. You could actually, if you wanted to, draw an area. I've been into that recently. I keep drawing areas instead of lines. So this could potentially be your area. So obviously this is just an example. So anywhere in this particular area you could actually add to your position, scale in, so you could do like 1 share for sale here, 1 share for sale here, and one share for sale here, and that would be 3 shares of Tesla that you'll have. And obviously we'll talk about stop losses in a minute, but if it comes down you make money, of course. Now before we're going to go ahead and place any trades, we should do a little bit more technical analysis and draw basically some more lines. Let's go ahead and move that down. And we're going to start drawing some trend lines. So obviously we see a nice little trend line here. We're going to draw that up Obviously nothing's perfect, but that will do for me. And you can note that the 20 moving average is kind of sliding up behind it. So let's go ahead and add a little bit of text. 20 moving average sliding up. I've got a thing for full stops. I don't know why. Anyway, 20 moving average sliding up, which is the yellow line. Maybe I should colour that yellow, just so it makes it clearer for you. Bloody hell, not that one. Maybe orange. We'll do orange. And the reason why I'm doing this is because if you are going to hit a trade in here for a resistance point, you would obviously put your stop loss just above. So let's go ahead and make another line and make it red. And that would be your stop loss line. This again is an example, it's not an actual trade idea. So if you were going to enter the trade around about here, your stop loss would be here. And you have to be very strict on that. That is your stop loss, that is your risk management. The idea is to not lose money, basically, it's to make money. But if you can limit your losses and catapult your gains, then you're doing very well. So anyway, yeah, moving on. If this trade was to play out, I would be looking for a nice little bounce off the 20 moving average. And we do have the trend line coming up here behind it, and the 50 moving average as well. Now, if it was to come down and bounce off the 20 moving average, I would still hold the trade. Of course, this is still a resistance point. There's nothing saying it's not a resistance point. I would just draw a line from basically here all the way down to where this 20 moving average could come down to, and if it came back up to test this resistance once again, and if it was to come down, it might create a double top. It's a different video. I'll link it up in the top right hand corner actually, and it may come straight back down to this trend line. And yeah, so you probably take a bit of profit here just because it makes sense. Having the trend line there obviously is a massive support. This trend line, you can see that already. But if it was to break that trend line, then you're in the money. Then you would move this stop loss. Hang on, where are we? Then you would move the stop loss probably somewhere here, and that would be your new stop loss, and you wouldn't lose any money because your trade would be in your favour. Hopefully I'm explaining this okay, but before we move on to another chart, I just want to explain to you basically where the negative RSI could be a good buy. So you can see down here, kind of in the turn of the year, we had a very negative RSI on Tesla, and you can see that reflected in the price action here. So if you were to kind of start your position, add your position within this kind of area, then you would have made a lot of money. Let's go ahead and look at the ruler. Bang, and if we go up to the kind of the top of the RSI, you can see that down here where I've got the top of the RSI, you would have made 100% on your Tesla trade. Now it would have been smart to obviously take profits on the way up, but again, that's probably a different video. Maybe a 50% retracement, you would take half your position and let the rest run, bring up your stop loss underneath here somewhere, and that is obviously your risk management, that is your safety. But again, that's a different video. This is just the basics of swing trading and how I perceive swing trading. So let's go ahead and have a look at another chart. We'll go on to Unity. We've had a little bit of news on that this week, but that doesn't really matter too much. We will just have a little scoot round, take that off, and so we've got a nice bear chart here. It's kind of consolidating quite a lot here. So if we go ahead and draw a line, draw it there, a little bit of support. I don't really like red lines unless it is a stop loss line. Now of course we don't really see a huge trend, but you probably could draw a trend line from here down to here. So we'll go ahead and colour that black as well. And what we'll do is kind of maybe zoom. Maybe we can go back a bit, see if we can get a few more resistance points. It doesn't actually go back that much, this chart. So yeah, maybe obviously here would be a good one. Bang. 75, but that's quite far away from where we currently are. So you might be looking at kind of this resistance point first, and then probably obviously here as well. Because these are two, fairly good resistance points. We've got a point of contact 3 times, almost there. 4, 5, 6, 7, and this one obviously is just a solitary one, but that is quite a powerful one because there's a very strong rejection off of that. Now, if we just go ahead and zoom in a touch, you can see why the RSI isn't everything, because this one doesn't really touch that kind of area. But what we can see is if it just touches down to that 25 level, it can pump straight back up. Again, if you have the RSI quite high, it came straight back down. We might actually be seeing that kind of doing that now, pulling back, but this is just news from the Apple conference that happened the other day. But what we would want to see from this is a nice little stay above this trend line, because these trend lines do actually act as support. And this could be a possible trade going forward. It'd be a bit of a riskier one, because if you entered here, for example, or even entered when the moving averages come up in this kind of area, we'll just quickly draw a circle to identify that. Pow. There you go. I don't know why I said pow. But if the moving averages came up here to this kind of trend line area, we'll just go ahead and zoom in so you can see a little bit more. So this moving average will come up here, and then your stock will continue coming down, touch this kind of trend line. That could be your entry point. That really could be your entry point. And then your stop loss, let's go ahead and add a stop loss. Well, again, colour that red because I like a red stop loss, obviously. It could be around about, it could be a really loose stop loss if you're not putting too much money in it, or you're starting a position possibly in Unity. Your stop loss would obviously be here because it's below the support line. If you could really risky, you could actually make that a lot lower. But you can see how if you were to enter the trade, about $33, you do have, that is quite a large stop loss, and that's not ideal. That is that's a 30% stop loss, and that's not really how you trade. So generally, I would probably have it below the 20 moving average. If it did break the 20 moving average, then that is what it is. That's how trading works. So if you entered at 33 and your stop loss is here, 6%, that's much better. Much better. It's much less risk, obviously, on the table. You're kind of managing that risk as you go. So then what you'd be looking for really is your play to tray out a bit like this. Obviously, fingers crossed. Where is my brush? My brush is here. So it would obviously come down, it would bounce off this kind of trend line / 20 moving average, and hopefully it would make a move up to kind of this 42 level, and that's where you take your first lot of profits. And if it perhaps came down to the kind of this level here, we'll just quickly draw a line in there, and it bounced off of here and then move up through there, then obviously, I mean, this is very bullish. This is very kind of textbook stuff, but obviously the stocks don't work like that. But generally, this could obviously work. So we'll just go over that one more time. So the stock will come back down here and we'll play up to kind of this 42 level mark. Again, we'll just check how much profit that would be if you were to enter. That would be 30%, which is an absolutely decent trade. You maybe take half your position, 2/3, 3/4, whatever your kind of trading plan is. That is up to you. But again, that is not the video for this. It comes down, retraces, hits this kind of point of resistance, bounces back up, and makes another move towards our next resistance point, which is up here. And then that would be a total of 77%. Obviously, you would have dropped half the position, but still profit is profit, and it's very important that you let your winners run. It's one of my rules. Let your winners run. Take 2/3 position, 3/4, or even half if you're feeling particularly good about it. But again, that requires a lot of evaluation if you are trading. But I realise this video is going on quite long, so I should probably start wrapping this up. But generally, that is how you swing trade. You kind of play the levels, move with the RSI, obviously have all the risk management strategies with you as well, and just be careful. Obviously it is a lot safer than day trading, of course, but you still must have those kind of rules in your arsenal as well. So that is it for this video. I realise I probably have gone on for quite some time, but I wanted to get as much value out there as possible, and I really value your time. Thank you so much for watching this video. If you did like it, I have another video ready for you to go in the top right hand corner. I really do appreciate if you do watch that. The video is all about 3 different ways that you really should be implementing within your trading and in your life, really. So go ahead and watch that, and obviously subscribe to the channel for more videos like this. Like the video, I really do appreciate that, and I'll see you in the next one. Trade safe, see you soon.